Have you ever walked into a car dealership feeling confident about your budget only to leave 3 hours later, wondering if you just signed your financial soul away? You might have met a friendly salesman named Brad who somehow convinced you that premium leather seat warmers were essential for your survival in a sunny climate. You are definitely not alone in that feeling. Today we are going to break down the hard truth about whether you should buy, lease, or finance your next vehicle as you approach your golden years. My goal is to help you navigate these murky waters without drowning in debt or making a choice that haunts your retirement. If you are tired of making financial decisions based on whatever sounds good in a high-pressure sales office, then this is for you. Here is something that might shock you to your core. The average person in the United States will spend over $300,000 on cars throughout their lifetime. $300,000. That is enough money to buy a decent home in many parts of the country or to fully fund a comfortable retirement for over a decade. Yet most of us put more research into choosing a show on Netflix than we do into one of the largest financial decisions of our lives. The car industry has perfected the art of making every option sound like a dream while making the math so confusing that you need a degree in advanced calculus just to see what you are actually paying. They have financing options, lease deals, and cash incentives that seem to multiply faster than rabbits the moment you step onto the lot. But here is the secret they do not want you to know. Car dealerships do not make most of their money from selling you the actual car. They make their real profit from the financing, the insurance, the extended warranties, and all those add-ons that magically appear in the final contract. Understanding this change is everything about how you should approach your next vehicle. Let us start with the reality of your retirement savings. According to recent data, the median household approaching retirement age has between $185,000 and $200,000 saved. If you spend $300,000 on cars over your life, you are literally spending more on transportation than you have left for your entire future. This is why your next car choice is not just about a ride, it is about your survival. Let us look at the most straightforward option, which is paying cash upfront. This means walking into the dealership with the full purchase price, handing over the money, and driving away with no monthly payments and no interest charges. It sounds simple because it is simple. When you buy a car with cash, you own it immediately and completely. There is no bank hanging over your head, no interest accumulating, and no restrictions on how many miles you can drive. You can drive across the country or let your grandson learn how to drive in it without worrying about a contract clause. The downside that people often mention is that you are tying up a large chunk of money in a depreciating asset. A depreciating asset is just a fancy way of saying the car is guaranteed to be worth less tomorrow than it is today. Think of it like buying an expensive sandwich that gets smaller every time you look at it. Financial advisors often talk about opportunity cost. They say if you spend $40,000 on a car today, that is money that could have been earning interest in the stock market. But for someone over the age of 55, there is a factor that is more important than a few extra percent in the market. That factor is peace of mind. Owning your car outright means that if the economy takes a turn for the worse, you still have a way to get around without a monthly bill threatening your home. Now let us talk about traditional financing, or what most people call a car loan. This is how the majority of people buy vehicles today. You put down a small deposit, borrow the remaining amount, and make monthly payments for years. The appeal is obvious because you do not need to have the full amount of cash today. But the catch in 2025 is the interest rate. If your credit is not perfect, you could be looking at interest rates between 11 and 14%. If you finance a $40,000 car for 7 years at those rates, you will end up paying thousands of dollars just for the privilege of borrowing the money. Dealers love to focus on the monthly payment. They might tell you that they can get your payment down to $400 a month. What they are not telling you is that they have extended your loan to 84 months to reach that number. You will still be making payments long after that new car smell has been replaced by the smell of old French fries and regret. By the time you finish paying it off, the car might be worth less than the final check you write to the bank. Then there is the option of leasing. Leasing is essentially renting a car for a few years. You make a monthly payment for the right to drive it, but you never own a single bolt on that vehicle. Leasing often offers the lowest monthly payments, which makes it very tempting. But leasing comes with a set of rules that can be a nightmare for a retiree. You are typically limited to 10,000 or 12,000 miles per year. If you decide to take a long road trip to see your family, you might find yourself paying 25 cents for every extra mile you drive. In 2025, dealerships are becoming even more strict about the condition of the car when you return it. That tiny scratch from a shopping cart or a small stain on the seat could cost you hundreds of dollars in penalties. Perhaps most importantly, leasing creates a never-ending cycle of debt. When the lease ends, you have no car and no equity. You are forced to either buy the car for a high price or start a new lease with a new payment. You never actually reach the point where you are free from a car bill. For someone on a fixed income, this is a dangerous treadmill to be on. So what is the best strategy for you? As a wise companion on this journey, I recommend the 3-5-10 rule for anyone over 55. Number 3 means you should try to put down at least 30% of the price in cash. Number 5 means you should never finance a car for longer than 5 years. And number 10 means you should choose a vehicle that you are willing to drive for at least 10 years. By choosing a reliable brand like Toyota or Honda, you are making an investment in your future independence. These cars are built to last and they hold their value much better than luxury European models. When you walk into a dealership, do not tell them how much you can afford per month. Instead, tell them the total out-the-door price you are willing to pay. If you have the cash, use it as a tool to negotiate a better deal. Remember that the dealership loses their bank commission when you pay cash, so they might try to steer you back toward a loan. Stay firm and remember that your goal is not a fancy dashboard, it is a secure retirement. The true cost of a car is not just the price on the window. It is the insurance, the premium fuel, and the specialized maintenance that some brands require. An oil change for a luxury sedan can cost 3 times more than one for a standard vehicle. At this stage of your life, you want a car that serves you, not a car that you have to serve with your hard-earned savings. Before you sign any contract, take 24 hours to think it over away from the dealership. Brad and the rest of the team will still be there tomorrow. Ask yourself if this vehicle will make your life easier or if it will just make your bank account smaller. Financial freedom is not about how much you make. It is about how much you keep. Owning a reliable car that is fully paid for is one of the best ways to ensure you stay in control of your life. Do not let a shiny new toy in a showroom take away the peace and quiet you have worked decades to achieve. Do the math, trust your instincts, and choose the path that leads to ownership rather than endless payments. Your future self will thank you for the wisdom you show today. Thank you for spending this time with me. If you found this helpful, please consider sharing it with a friend who might be heading to a dealership soon. Take care of your money so it can take care of you.